Today is April 19, 10:14 a.m. So we're doing a post-earnings video on Schwab because we made a video on this right before earnings to make a prediction, and lo and behold, we were correct in predicting this, and so it went up as we said in that video based on those unusual options we saw on April 14, which was on this day. And so that played out really well. We're currently at close to 3%. It was up a little higher this morning. And even after the earnings bullishness, it continued to rally. We kept our position on, and our position is still here. There's 2 more days left. It was a vertical bull spread. You'll see here we got the 54 and then we sold the 57. And so if we valued that right now, you'll see currently we could sell it for $150 or $149, just something around there. It's kind of fluctuating a penny or so there because we have the unlock button based on the market values. And if you remember, this was the original trade here. It was this trade. We had paid $65 for them. And so with that $65, if we do the calculations now at 150, if we sell that for 150 minus the $65 in costs, divided by the $65 to get a percentage, multiply by 100. And so that's actually 130% profit now. So make sure to watch that video. You'll see again our $65 that we had originally paid for. We'll put that link up here. And you can quickly see the video and how we anticipated this move towards the upside for the earnings prediction. And you'll see here, this was the unusual options trade that we saw. And so they had done this trade, which we didn't do because they required more buying power. They are also profitable, but not as much as in percentage-wise than our trade. You'll see here it was 56 in credit. Now they have to buy that back to close their order. So if we unlock it now, it's 24. So 56. The difference between 56 and 24, the actual difference between that, you could see here, it's actually, if they were to close it now, they could get a credit of 25. So what their profit was you have to add that debit because it's a closing order. So right now, if you buy it, it's 25, but since they're going to actually sell it to close it, to kind of close it up, they have to buy it back. But when they're buying it back, they actually get, so let's do that, 27, right? So they actually got maybe $83 in profit for every contract that they had. And so that 83, you can kind of calculate that based on their buying power. It's not going to be, because they had to put in a lot of money in these puts, their capital was tied up. So, for example, this 47 was basically a requirement of 4,700 of capital just to put on, to sell that put, to put on this trade. So if you take that into account, the 4,700, and then you multiply by 100, it was only about a 1.76% of profit. Based on the original capital of having to spend 4,700 in that trade. So sometimes we prefer to, if we get a direction from unusual options, we don't put the same trade because it takes a lot more buying power and your percentage of profit is much lower. However, there are benefits to doing that because there's less risk involved with them. But the major issue is the buying power. You'll see here, like if it had dropped, they would have had a limited downside risk here, all the way down here to 47, because they were not so sure how much it would drop in case there was a surprise to the downside. Okay, so if this was helpful, please give us a like. Watch that video on how we predicted this rally on Charles Schwab for earnings. You could replicate it for future earnings on other trades. If you learned how to analyze unusual options, we'll put that link at the end of this video again to make sure you can learn more on how we predicted this move and made 130% profit so far as of now. There's 2 more days left. And we'll take some of our profits, leave some on to continue to be profitable, because now the theta is actually getting close to, is actually positive now because it hit our strike price of 54. Once it hits the strike price, you'll see here the theta is now actually positive. So with the 2 days left, it's not going to decay. So that's why we're going to leave it on, take some profits, and watch this gamma risk, because as days approach to 0, there's a higher gamma risk. All right, well, take care, everybody, and I hope you learned something in this video. Please smash that like button and subscribe, hit the bell icon, and you'll be notified when we see unusual options. As always, take care.